Hello everyone, welcome back. I got some really good ones for you today on this Monday, April 17th, 2023. Lots been going on inside the markets, so let's dive right into it, shall we? The three major US stock indices all put on modest gains today. Nothing too crazy, kind of defying gravity, fourth straight week of gains for the Dow Jones Industrial Average. We even saw the dollar rise a little bit today, along with the 10-year yield. And normally when yields in the bond market are rising, the dollar's rising and rates are rising, you actually see downward pressure on risk assets like the NASDAQ, oil, Bitcoin, and gold. But today, the dollar came up a little bit. It did push gold and silver down, that dollar coming up a little bit. That 10-year yield popped above 3.5%. In the last video or two videos ago, I was talking about that 10-year yield being below 3.5%, really pushing up on those risk assets. The lower those yields go, the higher those risk assets go. You know, when Bitcoin was like 60,000, like last year, or whenever it, blew off to its all-time high, the 10-year yield was only like 0.65%. So a 10-year yield that's super low can put Bitcoin super high. And a 10-year yield that's super high, like call it, let's just pretend it was 5.5% right now, well, that would put Bitcoin at 12,000. But we don't have a 10-year yield at 5.5% right now. We have one at 3.5%, and that's allowing Bitcoin to hang out at 30,000, gold to hang out around 2,000. Kind of putting a floor under oil too. So when yields and rates are low and the dollar's low, things like the NASDAQ, oil, Bitcoin, and gold are generally up, and vice versa. That's kind of the mechanism you should expect to see. But today was an exception, so there you go. You can have days where the dollar rises, the 10-year yield rises, and stocks still rise. It did push gold and silver down a little bit today, did put a little downward pressure on oil and oil stocks, but the financials, XLF ETF, which is like the financials, up nicely today, and we all know that these banking crises have been pretty freaky, so I think the market kind of breathed a sigh of relief when it noticed the financials coming up and tech coming up. And even though we've seen Bitcoin down, a few percent into the high 29s or low 29s actually, I still think ETH has room to run. I still think the altcoins have room to run, even though Bitcoin is already at 30. I believe that a lot of traders are waiting for a pullback in Bitcoin, so they don't want to buy alts. But I'm saying if the NASDAQ can continue to do well, the XLF can continue to do well, the broader indices can do well, the 10-year yield can hang out around 3.5%, not go much higher, and the dollar can weaken, well, I think that would be rocket fuel for Ethereum. So I wouldn't even be surprised to see sound money plays like Bitcoin and gold kind of pull back a little bit, and then altcoins and things further out onto the end of the risk curve continue their march higher. Wouldn't surprise me at all. But I could totally be wrong. Throw garbage at me when I am. But I wouldn't be surprised to see Bitcoin pull back to the 27, 25 range, and then ETH continue up to 2,500. Because the market in the altcoins might start following the NASDAQ, the tech-heavy NASDAQ, the large cap technology companies, because altcoins aren't really sound money. Bitcoin and gold are the money, and they do really well when people don't want counterparty risks. So for example, a banking crisis like we had a few weeks ago really pushes people into sound money, Bitcoin, gold. Now maybe we see gold kind of pull back a little bit. I'm not bearish gold. I'm not saying to go out and sell your gold, but I am saying to be careful about chasing. But also do what you want. Don't listen to anyone. But I'm not particularly bearish on gold and Bitcoin. I'm just hinting at they might take a break while things further out onto the risk curve like Ethereum and altcoins kind of continue up. And you might be saying there's no way that's going to happen because Bitcoin totally tells the altcoins which way to go, and that is true generally speaking, but not all the time. Just like you might have the GDX, the gold mining index, or the GDXJ, the gold mining juniors, they generally follow the gold price, but not always. You can have gold sell off and those go up. So I think traders are waiting for a pullback in Bitcoin so they can buy alts, and I'm looking to see if we can just pump alts and not let the traders take our money, I guess you could say. You always kind of want to, especially in the short term, you want to kind of look for traders to be making the most obvious decision or following a good train of logic and then actually kind of inverting it on its head, or offering a different scenario that could totally be possible. So where a trader might say, oh, Bitcoin's at 30, I'm going to wait for it to pull back before I buy alts. Then I say the investment banks jump in, pump the alts because the financials are doing fine and the tech companies are doing fine, and no one wants Grandpa Bitcoin who's just sound money like gold. So I can kind of see how these investment banks might be like, all right, well, let's just pump alts. Let's not let these retail traders in because they want to wait for Bitcoin to dip first. I could totally see something like that playing out, but I could also totally be wrong. So just, proceed with caution. But I'm more bullish Ethereum right now than I am Bitcoin. Doesn't mean I'm bearish Bitcoin and a Bitcoin hater. And it's kind of the same with gold. I'm not really bullish gold right now, but I'm totally not saying to sell that stuff. I'm just saying to be careful about, chasing and buying these hefty premiums. What else do we got going on? So yeah, the crash callers are probably getting pretty frustrated at this point in time. They come out just, oh, there's about to be a crash, hide under a rock. I keep churning out these videos. I've never once came out here and given you a video where I was like, sell everything, get super freaked out and neurotic, and just sell the markets and become a deflationist and go long bond yields and interest rates and dollars. I've never said that. We have stuck to Bitcoin, gold, oil, and high growth tech. And high growth tech has struggled, but oil stocks have been doing quite well. Physical gold has been doing quite well, and that's what I like, physical gold, not mining stocks, nothing derivative. When you buy gold, you're buying the money, so don't buy a derivative of the money. That's what derivatives are for. If you want to buy derivatives, go buy a shit coin or go buy a tech stock. So when it comes to precious metals, don't go buying a bunch of shares of mining stocks. Gold's hard to get. That's why it's valuable. Don't hire people to go find something that's $2,000 an ounce because it's damn near impossible to pull out of the ground. So I like physical gold, and I like physical silver, and I like physical platinum. We did that last video about platinum, and I like physical palladium. But I don't like mining stocks. I don't like streamers. I don't like gold indexes. I don't like gold stocks. None of that. iShares, Silver Trust, GLD, none of that. Just physical metals. But don't just only do physical metals. That's why we also have the high growth tech stocks, the Amazons, the Googles, the Nvidias of the world. And then we have things like, for large cap oil, Chevron, Exxon, Halliburton. And then for crypto, you have Bitcoin, obviously, which I'm a huge proponent of, and never really wavered from that on this channel, always kind of talking about Bitcoin. And I'm a big fan of some of these alts too, like Ethereum, even some of these ETH killers like Avalanche, Solana. Hey, let's see what you got. So, and I like Chainlink Labs, and I like Uniswap. It's really interesting. Larry Fink likes the CEO of BlackRock, Larry Fink, I believe he's starting to flip really bullish on crypto. He used to hate Bitcoin. He used to hate Ethereum. He used to hate altcoins. And now, over the last couple of years, he's ultimately flipped more bullish. And now Larry Fink's, saying he likes altcoins that are permissionless, decentralized. He basically provided a framework for what he's looking for in altcoins, and it actually narrows it down quite nicely. So let me get this right for you guys. He wants it to be permissionless, open, decentralized, DeFi type protocols. So, to add something to that, I don't think Larry Fink at BlackRock would reach for any coin with a market cap, say, below like 500 million. So they'd stick to the bigger DeFi coins, which he doesn't come out and say which ones they are. But I think, and I could totally be wrong, we're just speculating here, I think BlackRock is into Uniswap, especially because the COO of Uniswap came from BlackRock. Look that up. Maybe, Chainlink Labs, maybe AAVE, like AAVE is the ticker, AAVE or AVE. So some of those DeFi protocols that are like open and permissionless and decentralized, I think Larry Fink could potentially want to reach for, which would leave out like metaverse tokens. He probably wouldn't be into that. Metaverse advertising, he probably wouldn't be into that. I'm into some of those, low-key. I like ad shares and veracity for metaverse advertising, and I don't mind mana and sand for the metaverse. So, but is Larry Fink reaching for metaverse tokens? No. Is he reaching for meme coins? Probably not. He's probably reaching for open, permissionless, decentralized altcoins with a market cap over 500 million. And Uniswap, I think, would fill that role. Chainlink Labs, AAVE, OV. I'm trying to think if there could be some others. Obviously, Ethereum. So, and when you're like, obviously, why obviously? Ethereum's market cap is like hundreds of billions of dollars. Networks that size are extremely hard to displace, and Ethereum is arguably like the only altcoin that actually has a vibrant and growing ecosystem. ERC20 tokens, and some of those coins could actually have a little bit of value. So I'm bullish on Ethereum because it brings to the table the Ethereum ecospace and all those Ethereum ERC20 coins. Half those altcoins that you look at in your watch list, they're Ethereum coins. So Ethereum is a little bit like digital oil. It's kind of like fueling a lot of these applications. And I know it's a lot different from Bitcoin. Ethereum and Bitcoin are totally not the same thing. Bitcoin's like digital gold, Ethereum's like digital oil. And Ethereum's digital oil powering all these other altcoins that are trying to provide some sort of use case, some sort of application to the marketplace. Provide some sort of value. So, yeah. Markets are up a little bit today. The 10-year yield is stable. That's probably why the markets are up today. Dollar came up a little bit, but it didn't really freak anyone out. Tech did fine. The banks did fine. Altcoins are holding up better than Bitcoin. Bitcoin's moved way further, way faster than anyone thought it would. Metals have kind of done the same. So, and now what are you seeing on the mainstream? Oh, inflation's going to stick around. Like, we didn't see that coming. One thing on, check out the sticky inflation supercut I did. Like, I've been saying pretty much every video for a year, inflation was going to be a sticky problem. So crazy stuff there, but this is what you get. Really high gold, $50,000 cars, $500,000 medium home prices, and like a $35,000 Dow Jones and 2,000 gold. Like, it's ridiculous. 30K Bitcoin to 2,100 ETH. This is inflation, So I hope wages and growth can catch up to inflation, because that's the big lie, that inflation's going to be transitory, while they sit there and they just pump up the stock market and keep your wage the same. That's dirty, and that's totally how they're the powers that be are kind of playing this game. So it's dirty, and I hope wages and growth can catch up to inflation. But otherwise, in the meantime, weak dollar plays are looking good, as good as gold. Gold, isn't that interesting how gold kind of weaves itself into like the lexicon? It's like you use these phrases like the gold standard or as good as gold. Gold is just really woven into the fabric of our financial system and economy and even culture, so it's crazy. So yeah, kind of giving you guys, earnings are coming up, okay? So I don't really trade around earnings. Like, I'm not going to be placing buy or sell orders based on what I think earnings are going to ultimately be like, unless earnings are horrible, but the market somehow prices in more interest rate hikes when that happens and everything starts to collapse, and then I'll just start to buy, kind of like, book says buy when you have a Silicon Valley Bank type liquidity event. So, but otherwise, I'm not going to be like, Netflix is reporting earnings tomorrow, which they are, or soon. Tesla's reporting earnings as well. I'm not going to be just like waiting for the earnings print and then press buy. Because a lot of times, if traders believe that earnings are going to be good, they buy that rumor, they buy the stock before earnings, and when they get the good earnings they were looking for, they have no reason to stay, and they book their profit. So you can have blowout earnings in a stock and it sells off. As a matter of fact, that's probably what's going to happen, because it wants to trick as many retail traders into buying at the worst possible time and then, dump them. Have the algorithms and the robots and the battle bots over there at Morgan Stanley and JP Morgan and Goldman Sachs, fleece the retailers, which you see a lot of. So that's really all I got for right now. You can keep an eye on earnings, and I'm sure the market is going to be paying a good amount of attention to earnings over the next few days because the market is already aware of the final 25 basis point hike to the Fed funds rate that's coming at the next meeting. That's already baked in. So with regard to interest rates, there's really nothing left to discuss. Unless those expectations change, like say we do go into this like economic contraction recession that everyone's warning about, well then the Fed's going to need to cut interest rates a little faster than the market thought. Or let's say inflation sticks around, unemployment stays low, and the economy stays strong, well maybe the market will later recalibrate expectations for higher interest rates for longer, which could put downward pressure on risk. So that's kind of what you see going on, but I'd say the market is pretty well baked in interest rate hikes and cuts for right now. It's really going to be earnings kind of moving the market. Earnings are what the 10-year yield in the bond market does, okay, more importantly. So if that 10-year yield in the bond market goes up to like 3.75% tomorrow, I would expect NASDAQ, oil, Bitcoin, and gold to get slapped pretty hard. If the 10-year yield hangs out around 3.5%, maybe even goes lower back into like the 3.4s or 3.3s, then I think that's going to push NASDAQ, oil, Bitcoin, gold, up. So another thing, you're hearing a lot about recession warning. Recession, oh, the recession. You're in it. Nothing's really changed there. The Goldilocks zone for the powers that be is to keep you in a permanent recession and growth, but then just have a permanent bull market in asset prices. So they always want to be doing really well in the markets, but then kind of complaining about a weak economy so that they can lower interest rates and make the markets do even better. That's kind of how I see that going. So have you noticed the recession's always 6 months away? Have you noticed that yet? You could go back to my videos 6 months ago and the headlines back then were, the recession. So just start to kind of like understand that the nature of the game is that at any given time, 48% of the players at the table, 49% or 50 are saying, oh, crash, we're all gonna die, crash, recession. And I'm looking around going, dude, things really aren't that great. We're kind of having a depression or recession of affordability, if you ask me. So, whenever we're missing growth, the GDP is still going to be positive, and you're going to be like, why is our GDP positive? We're printing that growth, So in real terms, the economy is, slogging along, trying to bounce back from this horrible couple years of just totally unstable markets and crazy headlines. And frankly, nobody's had a great time. If you're like, oh, Mike, it's about to get so much worse. It's about, you don't know what you're talking about. The crash is coming. Dude, Elon already lost. He already took a 50% drawdown last year with Mark Zuckerberg. I would call starting with like 200 billion and going down to 100 billion for the richest man in the world, like half. You're going to tell him that's not a recession, that's a raging bull market? Are you kidding me? So all the elites got smacked. Everyone's been smacked the last couple years. The Fed jacked up interest rates faster than they ever have in like the last 40 years, bankrupted a couple banks. Like I wouldn't say, everything's great. So, just because I hear, oh, recession, cool. Asset prices can go straight up during a recession. Do you remember 2020? 2021, that was pretty horrible, and the only thing that was performing were the markets. So you can have periods of economic contraction while asset prices continue to go up because you're devaluing the dollar to get out of your recession and growth. And if you look right now at Argentina's headlines, you're going to see people struggling with 100% inflation, the working class being decimated, destroyed. You're going to see those headlines for the poor people of Argentina right now. But you know what their stock market's doing? Probably it is going up. Check it. Check the Argentine stock market. I'm sure Argentine real estate's going up too because the inflation rate is 100%. So their houses are doubling in price and they're all starving. So up does not mean good. Down does not mean bad. A recession in growth doesn't mean it's necessarily a recession in asset prices. A recession in asset prices or a bull market in asset prices doesn't necessarily mean you're going through a bull market in economic growth. Start kind of divorcing the economy and the financial system. Keep those kind of separate. And not only that, it gets a little insidious. Sometimes the weaker the economy does, the higher the stock market goes, because the stock market is pricing in less and less interest rate cuts or more stimulus coming. So you can have a horrible economy and high asset prices, and you can have, on the flip side of that, you could have low asset prices, low NASDAQ, oil, Bitcoin, and gold, and a really strong economy. I mean, what if one share of Nvidia was $10 right now, one share of Home Depot was $5, one share of Tesla was $1, an ounce of gold was $25, and you're making $15 an hour at Burger King right now? You're actually winning hard, because you can take that wage that is at $15 an hour, and you can buy all these shares of Tesla and Nvidia and gold coins for practically nothing. So and everyone's employed, and assets are cheap. If we had a gold a gold standard, asset prices wouldn't get like this, where you check the chart and you're like, oh my gosh, that's up 800%. It needs to come down. If we had a gold standard, asset prices would because the Fed would not be able to print money whenever they need it, willy-nilly. So you'd have an honest economy, honest markets, free markets, flexible prices, where growth, matches growth in the stock market, and then a recession in the economy would match a recession in the stock market. Things would actually make sense if you're on a gold standard, but we're never going to be on one. So don't think that's where I'm going with that, because why would you want to put yourself in a situation as a government where you can't print unlimited currency at whim? They love that game. That's the only product they create, is inflation and more debt. So crash collars kind of eating doo-doo. One more interest rate hike left. That makes the markets pretty giddy, because once we're done with interest rate hikes, we're only looking at cuts, and that's quite bullish for assets. Morgan Stanley, Michael Burry, a lot of deflationists and crash callers out there just, continue to, we're going to crash. We're going to have a recession. So that's really all I got for you today. Good to see a little bit of strength in the NASDAQ. Good to see a little bit of strength in the financials. Good to see strength in Bitcoin. Good to see strength in gold. Recession, I mean, dude, I have not enjoyed the last 3 years, so I'm not really worried about that. And then earnings. If earnings are problematic, but the market thinks we're going to have less interest rate hikes going forward and not more, bad earnings could send the market higher. So it's kind of where we're at. Just my thoughts, though. I could totally be wrong. Just random guy on YouTube, but I hope this helps. I hope you found this video useful, and we're just going to keep going, all right? I hope this helps for you to just kind of frame where we're at and where we're potentially going. Thanks for watching. Like, subscribe, comment, share, whatever. You guys are awesome, and we're just going to keep going, all right? Till next time.